3 bits of information to you on a daily basis, during the week that is, because we don't trade on the weekends. You know, that's fortunate for all of us, I think. But this is an opportunity for you to kind of focus in on what Pete and I do on a daily basis as far as when we're trading, what is the catalyst for that trade. 99 times out of 100, folks, that catalyst is unusual call buying, like this, or unusual put buying, again, like this. Call buying would be bullish and put buying would be bearish. And that's what we concentrate on. We do follow blocks of options. That's what we do every business day. So, by the way, let's get to it. 3 at 3. All right, so as you already know, 3 at 3 is unusual option activity with me. If you want to learn more about how to actually trade stock, options, futures, cryptocurrencies, we have an app that has been approved, bang, in the App Store, and we're delighted about that. You'll be able to download that shortly. But if you want to learn more about what we do as far as education, mentoring, coaching, you can go to marketrebellion.com/get started. All right, disclaimer is that this is for educational and informational purposes only. Full stop. Let's take a look at Bristol-Myers, shall we? Bristol-Myers, as my buddy Kramer likes to say. BMY is the symbol here, folks. The stock has been breaking down a little bit over the last few days. I think you'll see that in a sec. This is probably why somebody elected to jump in here and buy July 55 puts. They bought them rather aggressively, bought almost 7,000 of these puts. And as they bought these puts, a put is, of course, the right to sell at a given price. So when somebody is buying that right to sell, could be insurance against a position they already have. But again, the bits of information contained there are they wanted to get in quick. They wanted these puts at 56.53 in the stock, basically $1.50 above where these puts were struck at the 55 strike, and they paid $2.15 for these puts. So that means $215 a piece, since every option is for 100 shares of stock. So when you're talking about 7,000 of these changing hands, that's $1.4 million in a trade like that. That's why we follow it, and that's why I'm highlighting it for you here. Now, how did that work out? Well, so far, as you see, the stock has broken down from 62 last Friday, all the way down now to 56. And at that 55 level, people wanted some either A, protection, or B, a bet that it goes lower. In either case, we like following that kind of trade. And since these are $2 options, I frequently, folks, will do something like a put spread. So for instance, that is what I did here. So let me see where that is right now. Again, these were July options that they were buying. So when I pull up my July fills here, because this isn't the only thing I'm trading today, when I'm pulling up these July options at that 55 strike, they are trading $2.85 right now. As you see here, they were $2.15 when we bought them, or when we saw them this morning. They are now $2.85 bid. Oh, nope, sorry. I was actually looking at the wrong stock. Let me see. 55s are $2.35 right now. Makes a little more sense, so I apologize for that. $2.35, and I sold the strike underneath it, the 52.50 strike, and I collected, was that $1.55? Let me see the fill. It looks like, no, I got $1.51 for those puts. So in other words, I've paid $2.20. I sold for $1.51 the 52.50 puts. So as you guys can figure out then, the difference between $2.20 and This 151 that I collected is in the neighborhood of 81 cents or so. So keep an eye on that. Means that spread can only go to $2.50 if I am right and it continues going lower. But this way I address a little bit of that more expensive, more rich premium that has been ascribed to these options. All right, let's take a look at Kevin O'Leary, because my friend Kevin will be joining us next Monday, June 15th, 4 p.m. Eastern Time. If you would like to join us and get a question in perhaps, well, all you got to do is register free, completely free, over at marketrebellion.com. If you don't want to be part of that live, well, we will post it the next day, but you'll miss the live aspect of it. You'll miss an opportunity to ask Kevin a question. Of course, with the thousands of folks that'll be on there, it's not guaranteed that every question will get answered. But if you have an interesting question for us, we will do our best to get that answered by Kevin. And the only way we can do that is if you're there live. So you can sign up at marketrebellion.com. I encourage you to do that because Kevin is a fabulous guest and he really knows what's going on in the markets. All right, let's hit the next. Our second of our 3 at 3 right now. CCJ, this is Camco. This is a uranium play. So we see them buying September 10 calls just out of the money. Why out of the money? Because the stock's $9.93. So I won't complain too much if you say, well, John, let's call it at the money. Okay, at the money calls. They're buying them. They paid $1.05 up to $1.10. So that means about $670,000 worth of puts, or rather calls, I apologize, were bought in CCJ Camco today. And where is the stock right now? Well, there you see it had gapped on the way down during the sell-offs this week from about $10 and let's say $10.40 on down to $10.20. So if we can push back into this $10.20 area, that could be a gap back up to about $10.40. That's what we would love to see happen since we have these calls and we paid $1.10 for them. You can bet that a September option, which has a fair amount of extrinsic value, meaning beyond just the in-the-money part of that option, they're now in the money by 6 cents. Beyond that, the extrinsic is time. How many months till September? Let's see. July, August, September. 3 full months until September expiration. So it's going to have that, those 3 months embedded in the value of that option, in addition to any intrinsic or in-the-money portion of this option. And then you've got volatility and other things that are a factor. Nonetheless, I like the trade. I bought it. If we see a return just to where it was, for instance, back at the beginning of this week, $10.80, we would probably have a winner of about a 2x on this one. So that's one of the things that I'm looking for. And like I say, to manage my risk, if this falls to 55 cents, I'll be out. I'll cut my losses at 55 because I'm in for $1.10. If I lose 50%, I'm out. If it doubles, I'm going to take half off the table. Those are my disciplines. I learned that through years of trading on the floor, and it has served me well over the past 38 years that I've been a trader. All right, let's hit our final 3 at 3 trade. It is our third trade of the day, and it is in GLW. So as I'm looking here in this one, I have all 3 of these, by the way. GLW. Corning, as it's known. The stock was $27.15, and they were buying the August 24 puts. This is bearish put buying in GLW. So again, 2 of these trades today, folks, have been people buying puts, thinking that either A, they want protection, or B, they're betting that the stock goes lower. So in the case of GLW, the stock has broken down a little because these 4,300 calls that were bought for 106 to 117. These are puts again. These 4,300 puts that were bought for $1.06, that's $106, on up to $117 per option, are now worth a little bit more because the stock has broken down through 27 and is 26.63. So let's see where these options are now. They've gone from, and by the way, again, these were August 24 puts. So they're out of the money by $3 when we cited this. So let's see, these August 21st expiration 24 puts are trading for $1.25. So $1.25 as the stock breaks down through 27 here. So in other words, you're already up some, let's call it 16 cents or more. I like the trade. I will likely be in these for right around 2 months. But if it breaks down because of earnings or anything else over the next few weeks, I'll be more than happy to take profits or cut my losses. Because again, it's all about cutting your losses and letting your profits run. Folks, I hope you have a great day. I hope you have a fabulous weekend. You can learn more about Market Rebellion if you go to marketrebellion.com/UOA. That's marketrebellion.com/UOA. That will get you information about all our subscription products because some of them post up 20, 25 trades in a single day. If that's too much for you, we have services that provide 1 trade a day or services that provide just a couple trades per week, depending how active you are in trading. So in other words, you don't need to pay for something you're not going to use if you're not a very active trader. I am a very active trader, so I would be in this one, and this is where I post most of my information. Again, make sure you join us Monday. Kevin O'Leary, that's Kevin O'Leary himself, Mr. Wonderful, joining us June 15th. Can't wait for that. It's been 9 months since I've been in person with Kevin because last time we did it was September last year in Vegas, so 9 months ago. But we've been on TV together since then, and we've done a few remotes together, and I can't wait to hear what the head of O-Shares, Kevin O'Leary, has to say about the markets. And if you want to hear it, make sure you sign up for free at marketrebellion.com. Thank you, folks. I hope you have a safe and happy weekend. Let's flatten the fear and get out there and enjoy ourselves, okay? Social distancing, of course. Bang.